Welcome everybody to OPN's Ask an Angel. Today we're with Kevin. Kevin's awesome. As you can already tell, we're having a great discussion about everything. Kevin comes across as being a British UK guy, except for he's a French guy who's landed in the British UK side, and he's kicking ass butt over there. And he's got a really cool model and lots of great things going on. But Kevin, I'm going to turn it over to you. Maybe give us a quick introduction on your background, on yourself, and what you guys are up to. And then one thing about you that nobody would know.
Right. So let's start with the thing that everybody would know after a few words. I'm French, grew up in north, kind of at the outskirts of Paris. First job was firefighter, then went on to many other things, such as photography, logistic, transport, and kind of were having my first 20 years in France. But when I looked at the clock and I looked at what I wanted to do with my life, I knew I didn't want to stay in France because I was trying to do something else. I didn't really know what that was. And I was super lucky because one of my best friend, who was much older than me, and still is, was married with an amazing woman from Indianapolis in the US. And she's American. She comes in France. I think it was around 28, 29. So 2008, 2009, and then what I was telling her was like, well, I'm looking at doing something else, and I wanna see what the US is like. And then she says, well, why don't you go and stay sometime in Indianapolis, have my family and my friends taking care of you. You go there. I did not speak English. I was just barely speaking French, I suppose. Anyway, so I landed in London, in Indianapolis in 2010, and started to work for Remax in the US, so in real estate, and did this for a few months. Started to kind of pick up, the keywords to sell houses and do some stuff, but it was very much kind of mind-opening because the US mentality for me was completely different than the work environment I was used to. So I've literally kind of I came completely changed when I was back to France, and I knew I didn't want to stay there still. So I went to Australia, applied to business school, went to Australia, and again, I was a bit far away from the family and stuff, but it was amazing experience working with, studying alongside amazing students from all over the world. And you get addicted to it. You get addicted by being surrounded by people who come from all diversity backgrounds, all sort of classes, and you just get so addicted to it. So in 2014 I landed in London. It was for me 2 hours from where my family was, and I'm studying economics. And after 2 months studying, one of my lecturer comes and says, well, I'm starting a business right now. We are a media company working in the financial services industry. Do you want to come and do it with me? So I started kind of taking off a small startup, um, basically taking the business off the ground, trying to raise a bit of money, building the network, doing some business development, marketing, kind of touching everything when you are doing a small startup. And I end up building a great network of active allocators. So typically family offices, hedge fund managers, emerging hedge fund managers, and so on. So I ended up building this network, which was kind of almost like a gift for me because I knew nobody in London when I landed in 2014. I didn't here because I was following my, a love, or I didn't come here because I did not know what to do. I just came here. And I was just building this amazing network between Monaco and London. And so lucky, as is always the case when in your career, luck is always a big part of your success. I met a guy who says, look, I'm taking over the CEO of Microsoft Ventures role. And I'm like, oh wow, that sounds like an amazing place to to be, especially when you are in 2015, when there are not a lot of incubators and accelerators. I mean, they're just starting. I mean, it becomes to flourish like mushrooms. It becomes to start like mushroom, but it's still the very beginning. And there were not a lot of corporate venture arms and a lot of corporate accelerators as well. So then he grabs me and say, look, I'm looking for somebody who wants to come and build a network, build the brand, build a network, and support the portfolio companies for Microsoft. And that's how I ended up in Microsoft at the end of 2015. Super lucky, backed by an amazing man who just believed that I could do the job, really. So I built a network for Microsoft for 4 years at the back of this. So worked pretty much with 200 companies for 5 years. Get to work alongside the leading VCs and get to understand a bit more about how that world works, because I'm new to it, right? I mean, 2015, 2016, I've never raised money from VCs before. I barely understand how that works. And for 4 years, I had, the chance to put a microscope on how a VC works, how they create their deal flow, how they do their due diligence, what makes them choose a company. And I learned this for 4 years intensively. I just do crazy hours and working during the weekends and meet everybody I can, because for me this is kind of a massive extension of my business degree, if you like. I'm learning so much from some of the best angel investors and VCs. And then I enjoy it. I create the ecosystem, I bring people together, I connect the dots. That's what I do. And then all of a sudden, one of the research I'm involved at one of the research piece I'm involved at Microsoft kind of led me to work with London School of Economics, the Open University, and Nesta Innovation here in the UK. And the goal of that research was to study the impact of incubators and accelerators, which is, again, it was for me an amazing opportunity to learn the limitations of incubators and accelerators, because there are so much of them, right? There is about, back then there was 125 incubators in the UK and about 250 accelerators. um, and so I get to study how they all work and how, what's their limitations, what the different business models that goes with such models, and whether they make money or not, right? And whether they are aligned with the success of their portfolio companies and how they start to make money. And all of a sudden, for me, then this picture became complete. I knew precisely how a company would raise their first 50K check, and what kind of terms they should go for, and where to find that money, and what kind of investor you don't want to take the money from, right up to kind of working with companies that close 110 120 million from large US investors doing Series B rounds. So I've covered all of this, and spent a lot of time into the details of that, and also looked at how those companies were emerging and supported by the economy, by the ecosystem as a whole. And that's how we came up with my co-founders, about creating a private startup ecosystem, a private market network, as we call them, which is Consilience Ventures.
Amazing. So you were also the youngest firefighter as well, were you not?
Yeah, I was one of the certainly one of the youngest of my region, and certainly one of the youngest in France. Yeah.
I like it. So you challenge everything. That's the best way to go about it. So in all this experience you had, including Microsoft, it sounds like you really started to build a flavor for early stage investing and how it works. Is that fair to say?
Yeah, which is an amazing space to be right now.
It is, and it seems like every day there's something new popping up, and everybody's going after this space like never before, which is pretty amazing. And I think there's going to be a lot of consolidation and weed out over the next 2 years because as everybody moves into a space and realizes that how tough it is, that things will start to kind of feather their way into other areas, right? Just like the marijuana space went really quickly and then dissipated down, and now like every sector starts to get a lot of attention, and then it spreads out when it realizes that it's tough. This isn't an easy space. So, there was one line that you guys mentioned that, and I think it really defines kind of where you guys are now. And it was said, "Cash is king." And maybe you can define a little bit more on what you mean by that in the world of a startup.
Yeah, I can't remember exactly where you saw this. We certainly think that cash is not the king. We really think that actually talent is scarce and cash is abundant, right? We're not going to go down to what's going on right now with the rescue plans of various governments around the world, right? We're not going to be talking about quantitative easing, but in reality, right now, when you look at, let's look at macro first, right? Governments right now know that the only way to grow their GDP is by investing in entrepreneurship and innovation, right? Because that's the real economic tissue, right? It's 95%, 97% of the economy. It's small and medium businesses, right? Now, because of the advent of internet and and other companies, other technologies that are built on the internet, then it becomes so easy to create new companies. So software, the cost of software, has gone down dramatically, right? It costs nothing to create software anymore. The hosting costs nothing. I mean, all of this becomes super cheap, right? So it's actually not very complicated to put some sort of an MVP together and then pitch it to a VC, you pitch it to an early stage, investor such as an angel. So, and if you have something coherent and if you obviously get some buy-in from those people, they will write you a check. But the problem is, it's how you go from that to something that is a real business that will succeed. So you can get your first 150K or 250K check, but if you don't get surrounded by the right people very early in the process, no matter how much cash you have, you're just going to be wasting the money, right? And the problem is that I think a lot more than before, as much as entrepreneur becomes democratized, the competition is also much more fierce. It's a lot harder to win because there's so many people coming up with ideas and so much capital floating around. So the process of becoming an entrepreneur, it's a lot easier, but the process of winning in this market, it's a lot harder, right?
Yep.
Because there's so much money going to your competition, and then the market moves so fast that if you don't spend the money rightly with the right person after the right market, then you're not going to last, right? And you're not going to be the last, right? People talk about being the first. At the end, what matters is being the last in the market. Whether you start the first or you start the second or the fifth or the 10th, who cares? The point is, do you really build something which makes you last? Are you the last one in the monopoly, right? When there are only three players, because there is the rule of three, right? There are always three you know uh, global players, right? It's the case for the train companies, it's the case for the telco, it's the case for the banks. It's in all of those countries you always have three rulers, right? And all of the rest is obviously gone. So finding the money from angel investors, it's obviously good because it gets you going, but the reality is that this is not a game of money anymore. this is a game of being with the right people at the right time, having the right discipline to do some trial and error, learn quickly, fail fast, restart again, do it again, and win. So and if you don't bring the right people around you, you're not going to be able to succeed.
No, and I love that. And I think when we were touching on cash is king, I think it kind of referenced the fact that cash is abundant out there and you got to figure out a way to maneuver and work your way through everything to get to that win. And you defined it quite well that you're not going to get there if you don't have the right team. And a great line that came, it was an interview I did a couple weeks ago. And the gentleman said, I would invest in a B product with an A company
Mm-hmm.
or an A team. And it's so true because that A team will make that B product an A product. But if
Mm-hmm.
you have a B team and an A product,
Yep.
you don't have the same success, and it's not going to be able to turn itself the same way that you hope it will. So, team is a big proponent to growth and to figuring out where you need to be in a market.
Yeah, I guess the nuance is that it's not all about the team. The team and has a network, and this is that layer. That's the team is the first layer of the onion, but the network of that team, the second, third layer of that onion is as important because it accelerates your sales cycle, it accelerates your credibility, it makes you avoid some mistakes that they've made before. When we in our network, when we talk to somebody who's done that for 40 years, he's got the answers to the questions that you didn't even ask yourself. That's power, of leveraging somebody who's done it for 40 years, who's
Mhm.
seen all of the technology stacks evolving, and who understands exactly and because the things are always the same in the end. They are always the same. So once they have developed this pattern to think about something they've seen in the past, they will tell you, I'm not sure I'm right. And that's usually how you see how smart they are. They tell you with humility, look, I've done this for 40 years. I've seen this working, but I'm not certain that that's the right answer. And that is super, super powerful, as opposed to somebody who's out of university with a nice degree from one of the leading university, right? And who's going to tell you, oh, yes, I've got my MBA, I'm 25, 30 years old, and I've got the answers to everything. Well, you're gonna you're gonna have some bruises and some scars, and that's just the way it is. And you've got to learn.
Agreed. So to follow on that, you made a comment which I can tell you that in all the interviews I've done, I haven't heard this comment yet, which is crazy because in the workspace that we're in, it tends to happen quite often that you hear this. But you said fail fast. So your whole thing was trial and error and then fail fast. Can you give us an idea for the audience on what you mean by fail fast? Because I think people tend to think it means I'm working on something, it's not working, shut it down and start something new. And I'm not sure that that's the terminology we're going for, but
Mm.
maybe you can explore that a little bit more.
Yeah, so entrepreneurship and innovation is an iterative process, right? You never get it right. You never get it right. There's unless you are super lucky, you are one of the very few, but the pattern is that you're not going to get it right. That's the foundation of innovation. The risk that you are taking is obviously unknown, and your job as an entrepreneur is to try to reduce that risk. So all we do as entrepreneurs is, and as investors, is we look at opportunities. We don't have a crystal ball. We don't know whether this is right or wrong. We see behaviors, we do our study, we understand market dynamics, we understand micro and macro trends. That's what we look at, and those things but there if you do a triangle there, there's what you control, and on the top of that there is what you don't have any control of. So we focus a lot more on what we don't what we control, because if you control it, if you really focus on what you control, then you're much more inclined to succeed with the things that you don't control. Yeah. So Fail fast here means how quickly can you learn? That's pretty much what it is. How quickly can you learn? If you're really learning something which is wrong about what you're doing, what it is that you are, what are your actions that you must take in order to make a decision. And if you are trying to sell stuff and then you don't really see people buying, then you probably are not something, you're probably not in the right business. So fail fast here means, and that's very much one of the big challenge that entrepreneurs are facing. It's because it's a lot easier today to find money from angel investors and early investors than from customers. Yeah, a lot easier, super easy, in fact. Especially when you are here in the UK, when you have massive a massive tax incentive, where the investor in the end, the SEIS and EIS investor is only taking 30% of the risk. Bottom line is 30% of the risk. You invest 100K, worst you lose, it's not even 30K.
I need
But
to
if
be in
you,
the UK.
so that's, and that's against, it's great because it helps people to get going, and it creates jobs. But the
Yeah.
problem is that all of a sudden startups then become almost like lifestyle, because it's so easy to put up a slide deck together and then kind of do a nice hockey stick curve saying this is our business model. But the reality is much harder. So that's what we're saying. Fail fast is like validate that you have buyers as soon as you can. And so long as they have not put some money and then they're not supporting you, and they don't need to be 1,000 people, right? You can find 10 people who write a small, check for buying the product. That's pretty much what. And if you don't find this, if you don't find this small group of lovers, early adopters, then what it is that you should do in order to do that. And if you are in the wrong direction, just fail. Give your money back to your investors. There is no harm of being wrong, because they are aware that this is risky. They are aware that this is that you don't know what you're doing. You think you do, and you have to be a bit, you need to be a bit convinced about what you are after. But in the end, if you really don't see the early signs of success, just give your money back to your investors. And
I'm
don't
not sure
believe
I've
that
heard anybody
social.
giving money back, but in I think overall it does sound good. But you're right. It's a shift and it's a movement that as you're building your company, you're pivoting, you're
Yes,
testing, and there's a position where you have to
yeah.
make a decision. Can you double this business? Can you 4 times this business? If you can't, then how do you move into a direction where you can?
There's so much value in humility here. If you go back to your investors and say, look, I've taken your 10K check. I'm only able to give you the 5K check because I spent half of it to prove or disprove that what I was doing was right or wrong. I now know what I've learned. I know my lessons. I'm going to give you I'm going to liquidate the company. I'm going to give you what's left. You take it. Next time I come back, I'll tell you a bit more. I'll have learned, and I have much more chance to succeed next time. So I'll be more inclined to raise money again, because I know that I will have created trust with somebody.
I like that. No, that is very valuable. If you could get entrepreneurs to think that way and go to that direction, hey, you know what? You've got the money there. If you're going to be able to make the right hypothesis and build it out into a business, and if you don't, figure out where you can make that change. And if you can't, then fail it
Exactly.
and start something new, but bring something back to the investors that show, hey, they paid your time to do this. Now move on to something else that may be more constructive, and you'll probably find that that investor that came in the first time will come in the second time, because they're going to see that you were true to your end goal and
Exactly.
stuck behind what you're doing. So I love that. That's I guess we can preach it, and hopefully maybe some startups will see that as a way to test. They're getting paid to test a theory, and if that theory works, then they're going to be able to be successful, and they have a great team of investors and other people supporting them. So that's great. So on this journey, and I've read a bunch of different things that you've written and you composed around this. So maybe you can share a little bit more about how you envision and see a startup going through this process. Because you're kind of, in a way, you're trying to change the way VCs work and the way that they fund early stage companies. So how does that look to you if I start a new company and I come to you, Kevin, and I say, Kevin, I got this great idea. This is what it is. How do you see the journey for me from raising funds?
Yeah, so from your point of view, and I'd like to go back to your point still about you know, the way we see VCs moving forward is that you know, VCs are great on their own right. They do what they can with the model that is suited for purpose, right?
Yep.
So essentially, just to do a quick parenthesis on this, is that they invest a bit of their money, they prove they can find good companies and show some track record. They set up a fund, they raise the fund, they deploy the fund, they liquidate the fund. That's pretty much 99.9% of the VCs on earth, right? But they are super small teams, and we know that some of those ones, they see so much deal flow that they are struggling to see that deal flow and curate that deal flow properly and make sure they obviously do the proper due diligence, because what's on the website and on the pitch deck is very often different from what's, you know, on the code base, or what's on the bank account, or what's on the customer pipeline. Yeah. So there is a lot of due diligence, and due diligence is super key here to be a good investor at seed. You need to put your emotions away. You need to tell, I don't like this entrepreneur. Even if you do, you need to be so controversial. You need to be like, you know, almost like bipolar. I like it, I don't like it, and always find reasons not to like a deal. And then that is going to be a gift to you, because you're going to be spending so much time into the details that will make this business kind of work or not. Yeah. So having said that, we think that all VCs are going to be forced to effectively spend more time with the companies that they enable, they back, right? If you look at the best VCs on the planet, you know, the A16Z and the Sequoias and the Benchmark, they all have teams working with their portfolio companies. They do not, they try to reduce the uncertainty by being super hands-on. They are large funds, they manage billions, you know, but they are super hands-on. They still have lots of people on their payroll, and those are some of the best, and they work with the portfolio companies. They just don't deploy cash and come for you know, they come to the next board meeting asking you how fast you are growing, right? That's very much what all VCs should do, but the reality is that the model is so limited. So you, as an entrepreneur trying to raise money today, what's super important is that you define precisely what you're trying to achieve yourself, what you are trying to prove as a company, right? What it is. Is it your first revenue? Is it that you're trying to get to a certain level of product maturity? Is it because you are trying to finance some market research and some product development to prove your business model? What it is, what is it that you are financing? Yeah. Is it your product market fit? Are you financing your minimum viable value? You know, what's the value that you're creating to a customer, which you can quantify and say, now I know my pricing, you know, what it is that you are financing. And truth is that money is not going to give you that. You know, money is just going to give you the fuel, but you still need to find the right, you know, the right direction, and obviously the vehicle to get there. The vehicle being the team, being your operation, you know, being all of that. So yeah, I think you, as an entrepreneur, the way we see this evolving is that we are a co-investment platform. We are we are working alongside other angel networks and VCs, and then we are offering this platform for them to review deals more efficiently, for them to leverage their network and an external network better when it comes to doing startup due diligence. Typically, can you tell me what you think about this? Can you look at the cybersecurity side of this business? Can you tell me if this is going to scale? Can you tell me about the science? Is this GDPR compliant? All of those things that are super important when you're making a deal. Then you really want to make sure that you've got a good network around your deals when you're before investing in, because you can't know everything yourself. You just cannot. You can have great gut feeling and you can write a check and be super lucky, but those are exceptions, not the rule. Yeah. So back to the story. As an entrepreneur, when you're raising money, you're going to be working with one of our VC or angel network partner. They're going to be basically backing you. They're going to say, okay, well, you need 500K. We write a check of 300K, but we'll co-invest with Consilience Ventures. They are bringing the network of expertise to get you to your to your objectives, right? To get you achieve your goals. We think that you're an amazing team, but you need a great CFO doing, half a day a week. You need the right COO, you need a regulatory director, you need one of the best lawyer. That's what you need to start. You can't afford just to work with kids outside of coming out of universities, because they don't want to work for big corporates. That's not the right channel to hire customers. It's great to have young kids, cool kids, 20, 30 years old, and because they've got plenty of energy and stuff. But at the end of the day, what you want to have people that can be accountable, responsible, and make proper decision, right? So that's why, as a startup, the average age to succeed is 42 years old, right? There's a reason for that. It's because you've got the Zuckerberg and you've got some others that are super lucky, get into things, and of course they've got great backing, so they get, the market was with them. So all the stars were aligned, but the rule is that you need to have lots of industry experience if you want to win, and you need to be surrounded by the right people. So, to get the long story short, we co-invest alongside angel investors and VCs. They bring the cash because that's what they do. We bring the expertise. And when I say we, it's sometimes them as well. The only thing they do is they're using our platform and our technology to invest their time into digital assets, because we have created this currency for entrepreneurs by converting the shares of the companies into tradable assets. So that's very much the scenario here. Now, we offer speed at the back of this, because not only you work with the right expert at the beginning, we've got the former CEO of Firefox, we're talking to the former CEO of HP, we're talking to one of our investors, the former CIO of Santander Bank. Those guys, they have 20, 30 years experience. They don't bother much working for £1,000 or £2,000 a day. That's not what gets them out of bed. What excites them is that they are building something super big that is going to turn lots of money in 5-10 years. That's what excites you. That's what motivates them. And also because they enjoy being involved in complex challenges as well. So all of this is nothing about money, as you can tell, which is where we come from.
No, I like that. So in there, is there a different journey than you're taking from a pre-seed to a seed to a Series A? If we start with yourself,
Yeah.
do you change the dynamics of this now because of
Yeah,
the way you guys invest?
it's a very good point. Actually, you can, since we enable startups to convert their shares into a currency, to have access to a curated network of experts, effectively what you can do as a result is that you can break down the fundraising cycles into small chunks instead of going after big rounds. So as an example, instead of starting, a seed round at 2 or 3 million, European, average, seed round size, you would basically get going with 250K. You convert your shares, you convert 250K worth of your shares into this currency. You pay some experts and some of your employees, some of your teammates, whoever, to get to the next sprint. Right? What do you try to prove in the next 6 months? You raise that. In 6 months, you have proven X, Y, Z. Your valuation is higher. Your risk is lower. You raise again 250K, much more interesting valuation, because there is the business. So all of a sudden, as an entrepreneur, I earn on the valuation because I don't get to spend my equities at the wrong valuation. Something that young entrepreneurs don't understand is how equity works. Most entrepreneurs we talk to, they don't have a clue about the importance of good equity management. No clue. And even some of the more mature entrepreneurs, because this is an art on its own. Understanding equity management is king for an entrepreneur. So in the end, entrepreneurs working with Consilience Ventures, they get a better deal than if they're raising the next 18 months of cash flow, because when they raise 18 months of cash flow, 10 or 12 months later, this round, they are still spending their equities that they, at the price at which they raised, 12 months ago, although the business is completely different, because young startups are changing, high growth companies are different every 6 months. Every 6 months you are a different company. So why do you need to raise 18 or 24 months of cash flow if you know that 6 months from now you're going to be a very different company, right? Why would you not be smart about this and just raise your next 6 months? And the reason why today it's not done, it's because it's bloody hard to raise money. It takes 6-9 months already. So when you do this for 6-9 months, you want to do it only for 24 months, 18 or 24 months, because that's only what makes sense, because you don't want to keep, spend your time doing this. But if you really focus on building your business and you really get your product right, and you really get your team right and your exec team right, and then you go after a big market, then you should be raising as little as possible and then do it again very quickly. And that's how we're breaking this cycle down. There's something emerging here. I mean, it's been around for a few years now, but there was no seed, at the time of the Amazons, or there was no seeds. It was Series A right away, and then you had seed, and then now everybody's talking about pre-seed, and now everybody's talking about pre-seed, seed, pre-Series A. So as you can tell, the fundraising cycle is shortening. Right? It's shortening. And of course, then you raise a Series B and a Series C, and then you take your 25 million in the bank, and then you expand. So growth money is still roughly the same, is unchanged, but the whole launching and growth phase, the early days of the growth of the companies is completely, it's changing. And we want to do financing for companies, not pre-seed or seed, but just your project, get it, prove it, show us what you've done. And we do this alongside other VCs who are themselves writing money, and of course writing checks, and of course benefiting from the process of de-risking those businesses and investing at the right valuation for the right risk, instead of just benchmarking.
No, I love it. And I wholeheartedly agree with you that, companies will come to me and say they're raising $1.5 million on a pre-money valuation and pre-revenue. And I'm like, well, why wouldn't you raise 500,000 and show what you can do, and then come in and do another raise and just keep doing micro raises, because you're pivoting and changing. You're not, I guess the best example is that you're going to climb a mountain. You don't start at the bottom of the mountain.
Exactly.
Climbing. You start way further back.
Exactly.
And then there's 15 trails that will get you to the base of the mountain.
Exactly.
You're going to pick the right trail that gets you there. So keep doing the things you need to get there. And then when you get to the base of the mountain, there's maybe 2 trails that will get you to the top. And you've got to really, at that time, you got to focus, hire them, make sure you got the right teams, the right money, the right everything to pick the right trail, because the temperature changes, the weathers are different, and you're going to go through that growth. And I think you got to get to there first.
There are some benefits, there are some nuances. Is what I'm saying is that there are some benefits of raising big chunks, of money. It's because it helps you to attract, some talents that would not consider you otherwise. But I think this is very much where finance is changing, is that the best people are not looking for money anyway. They're looking for real skin in the game.
Correct. Yeah.
They want, that's what that's not what they are looking for. So of course, if you can say, look, I've raised it, 1.2 million, I'm now ready to pay you 100K salary. Well, you may be doing a mistake here, because instead, that person, if that person is the best person, that person may take half in equity and half in cash, because you are much more resilient cash flow wise. That's what really matters here. So at the end of the day, but at the end of the day, you don't want to have 20 employees on your cap table, because it's a mess, right? You don't want to do this. So that's why you create an ESOP and stuff.
Yep.
But what if you really tokenize the shares of the vehicle and you use this as a currency without having them on your cap table? Bang, problem solved. So all of a sudden you work with and you don't need, sometimes those people are too good that they don't need to be full-time. Our CFO, for example, former CFO of EasyJet, when I started the company, there was no way I was going to take, EasyJet CFO full-time, but the guy was so brilliant that he needed to do half a day a week or something. And that's how we started, and we did this for a year, and then I really, I was totally dependent on him, because he is just an amazing CFO, and thanks to him, we managed on get on securing amazing tax claim, and an amazing R&D credit, and and we were very wise in terms of money management, very wise, and it was only possible because the guys has done that, for multi-billion-dollar companies, and he was also financing some spin outs of, backed by EasyJet and Easy Group. So that's what I'm talking about here, is that you don't need to pay a full-time salary if that person is the right person at the beginning. There is a point where you need to onboard those, but it's gradual. So that's why you don't, and then since hiring is gradual, why do you not raise money gradually? Yeah. So that's very much the bottom of it. You have to raise money gradually as you onboard more resources.
I love it.
And it has to be synchronized.
No, it's I love the way you shared that. It totally makes sense. There's a totally a different way to manage financing and the way you raise funds. And I think a lot of startups will get a lot out of this conversation on learning how those different vehicles can work for them and how they can grow their team. And part-time CFOs and part-time people can actually help them move, give them some shares, prove the business, and then slowly start to grow and build in those key areas of people that are going to really make other angels and other VCs want to invest more.
Much more interested.
Yeah.
Much more interested, because you're a safe business, and you're a much safer business.
Yeah.
Because you've got those people taking care of what really matters at this point, and then no matter how many co-founders you have to start with, there are always lacks, shortcomings in the team, and then gaps, right? Always. I'm not going to mention any names, but when I was at Microsoft with my team, when we were doing the tech due diligence before onboarding companies, we were working with companies that were very well funded by VCs. They had no tech, absolutely no tech, and they were rising at tech, at valuation of tech businesses with, a revenue multiple, that would make no sense, right? And there was no tech. So how do those people with no technology, get to raise those crazy valuations? money from people who are professional, because we're not talking about raising money from angels, which are largely unprofessional. There are some professional angel investors now. There are some solo capitalists, but there are more people that just do this as a side gig because it's fun, because it gives me, it excites me, and then it's also a good placement, because if I look at a bit of my money there, I'm much more likely to get some money back if I diversify well enough. And diversifying means at least having 50 companies in your portfolio. The problem with 50 companies in your portfolio is that it's going to take you a decade to get to 50 companies, because you need to review at least 5,000 deals. And I'm not talking about investing in all of the companies that raise money for crowdfunding, because we know the average returns of crowdfunding platform is it's close to nothing. So and that's why most crowdfunding platforms are not sustaining in the end, is because the companies that are raising via crowdfunding are not that great. Some are, but it's a lot more difficult because there is a lot more noise. So yeah, at the end of the day, how do you build a nice diversified portfolio alongside top players who know how to select companies and know how to take care of businesses and business growth without spending your whole life on it? Just leveraging a nice network of people who know exactly what they're doing. And by leveraging this network, this what we call wisdom of the crowd, then you obviously invest in something that is, by default, a lot less risky. And therefore, your revenue multiple may not be 30, 50 times as if you found the only unicorn, because you only have 0.03% or 0.02% to find a unicorn. If you don't find a unicorn, then if you find companies that exit at 100 million, then it's fine. It's fine.
Yeah, it's still a good win. No, I love it. That's great. All right, so now we're going to shift quickly into our rapid fire questions.
Right.
I think you and I could talk about this for a very long time, because it's both dear to our business models and how we work and how we invest. So I love it. But we got to jump into these questions, and then we got a couple of questions to end it all off with. But
Right.
so far, amazing. Okay.
Okay.
What's your favorite part of investing?
Well, that's a tough one. It's my favorite part of investing is understanding how entrepreneurs think about the business they are after. That's really what excites me, is that I'm learning so much the way, yeah, that's what it is. So think about the way entrepreneurs are thinking. That's what I enjoy the most.
I like it. How many companies do you invest in per year?
We've made 5 investments this year. We're going to be doing about 20 next year. We're building our capacity to make 100 investment a year.
Awesome. Any verticals that you like to focus on?
We for now focus on fintech, medtech, and also we also have strong capabilities in IoT, industrial, cybersecurity.
Okay. We have a couple companies you can check out. All right. Any
Would love
due
to.
diligence requirements that you look for before you make a commitment? So anything that's really stands out that you got to make sure? You mentioned team before, but is there anything else on a paperwork side that you really want to make
Yeah.
sure you have?
Yeah, we have very disciplined due diligence framework where we have about 30 data points per startup, but we also have broken that down into 3 different company maturity. So we have 30 questions broken down into 6 different categories that will go for prototype companies. And you have the same for product market fit companies, or at least companies that pretend or believe they have reached product market fit. And part of this assessment is also validate whether they have reached product market fit, or whether they have, or whether they believe they've reached product market fit. And then there is another set for scale ups. So in the end, all of this is standardized, and it's basically based on the company maturity. Yeah.
Okay.
With some weighting and stuff. So yeah,
Makes sense. Do you lead rounds?
we do both.
Okay. Any preferred terms? Do you care if it's pref shares, common shares?
We are flexible on we are a flexible investor. We sometimes we will we'll take a board, sometimes we won't. We're very much flexible. At the end of the day, not every deal is all deals are different. So we're just agile here. We do what makes sense.
Okay. And do you have a follow-up investment on the companies as well, at a percentage of that investment?
So at this point, we're looking at continuing investing into all our companies up to Series B and certainly beyond, depending on the appetite of our network. Given that we reinvest on a performance basis, so if they're reaching certain criteria, we are reinvesting.
Okay. Any companies that stand out that you want to share? You don't have to share the names, but you're more than welcome. Any companies that you think are rock stars you really want to talk about?
I think one rock star in our portfolio, emerging rock star in our portfolio, is a company called CheckStep, which is doing amazing work in tackling issues around quality content, organic user-generated content online. So the one simple but still bad way, sometimes simplistic, is negative. So this is going to sound negative, but enabling platforms to generate fake news and fake content. CheckStep is doing an amazing work there. But I mean, all of our companies are super exciting. We've got company tackling private debt issues, working with debt and insolvency practitioners. So they are basically doing amazing deep learning to enable the aggregation of data and then the structuring of data a lot more faster than anyone else in the market. We've got amazing AI for premature baby. And we've got some cool tech that are just very good UX UI for wealth managers. And yeah, so we've got a pretty exciting portfolio.
Awesome. Okay, so now we're going to jump into two more questions, and then we're going to have a couple personal questions to end it all off. So,
okay. I may have an internet issue at the personal question. You never know.
All right, actually, one more question. So, based on all the things that you've done, everything you've gone throughout your career to get yourselves to the platform you guys have built and the way you're investing and the way you're helping startups, is there any heartfelt story that you want to share that really defines what an entrepreneur is? Like someone that maybe went through a tough go and it succeeded, or they went through a tough go and they decided that it wasn't working and they failed fast. Any great story that the community can relate to?
Yeah, that's a tough one. I think I think there is the common pattern is that if you seeing that you're pushing too hard and you don't get any results, and I see this as a pattern across some of the entrepreneurs I admire, but there are a few ones that I prefer not to mention.
Yep.
They've gone through tough times, very, very difficult times.
Yep.
And they exited in the range of $50 million, and they consider this as being a failure because they were building something very, very big. So yes, I've seen entrepreneurs suffering a lot, and then that kind of I was not emotionally affected, but it was very hard to see how painful this process of raising money was, given the size of the opportunity they were going after and given the size of the problem that they were solving. And that's one of the challenge, which is sometimes something that makes me really think hard about how we can change the way companies get funded. It's because real innovation, at least in Europe, rarely get funded. Very, very rarely. You don't have lots of risk takers in Europe. You have lots of LPs, mostly governments. So you have lots of very conservative LPs. And as a result, really innovative companies don't raise money from European investors, which is why now these US VCs are doing their shopping here, because there is a land of opportunities. for risk takers, because Europe is conservative in comparison to the US, but the technology and the talents that is growing up here is just amazing, and it's just so frustrating not to see so much more money coming into this market, because if you bring that capital and expertise to this market, you've got something amazing. This is the best market in the world per capita, right? Europe is the best by far, before the US. So of course, there is less venture capital money flowing, but the standard of living here, it's very high, so people can buy.
That's interesting because I would say that based on that theory and the information shared, Canada is very similar,
Yeah,
where they're very risk adverse. Americans tend to have see it, go after it, and take it down and move to the next thing quickly.
yep,
So I think everybody carries their own value, but there's not very many countries that have the same mindset financially. The U.S. is very much driven around finance. Their whole country is,
the
and
whole country.
yeah, and that's what makes the U.S. the global power that they are.
Exactly.
The rest of the countries are a lot more reserved, and even COVID has really pulled a lot of countries back even further because even though they know 95% of the country's made up of small business, the risk factor is very reduced because that's what they teach you to save for rainy days and not to invest in things that seem crazy. But the ones that have been the most successful happen to be the ones that are a lot more innovative and more crazy. And
Completely.
yeah, and you'll usually find that Americans don't have a problem jumping on that because the risk factor's there because they've been brought up on paying for themselves, taking care of themselves, that money's only as far as you can find it and build it and grow it and make it happen. Whereas the rest of the world is go get a job, work for this company and get your money and put it in a bank account and save
Exactly.
up. So it's a tough space to be maneuvering in, but I think you're right that there's a lot of opportunity to pick up some great companies to invest in if you're open to it and you can handle the risk.
Exactly.
So the personal side questions, which is always my favorite, only because it's only something I recently started doing maybe a month ago. So the best way, the first question is, what is your favorite sports team?
Sports team, it would be right now it's Mercedes, McLaren, Hamilton, without any doubt.
Which team was that?
Mercedes, McLaren. So Formula One
Yes.
champion, Grand Prix. Hamilton is by far.
Hamilton, yeah. I was just like, really? All right, I like that. Yeah, that's good.
My favorite sports team right now. They've managed to crack everything.
Yep, I like it. That's brilliant. Okay, what is your favorite movie, and which character would you play in the movie?
That's a funny one. What's my favorite movie? I don't know what's my favorite movie. I think yeah, I know. I don't know the name in English. Let me just look it up for you. I just want to make sure I can share with the audience. Intouchable. Oh yes, it's actually so the Intouchables.
Untouchables. Okay.
Intouchables, yeah. And and I would play the main character, which is the funny guy along, working for the disabled man, doing some crazy stuff, making people laugh, and giving Omar Sy, so Omar Sy, the main actor, doing some crazy stuff, making everybody laugh and go outside of their comfort zone to the point that it actually is enjoyable.
So Untouchables is the I want to make sure I got the right movie here.
Yeah, the Untouchables, yeah.
The Untouchables, which is from 1987?
September 2020, 2012.
Oh, 2012. So I got the wrong one here. Okay, so I'm not finding the right movie here.
Yeah, there you go. drop it here, the Untouchables. And I even share with you the trailer, because if you didn't see it, then it's a must. It's a must watch.
All right, and you're gonna play the Intouchables. Oh, I remember this movie. I saw this.
Yeah,
Yeah, this movie was fantastic.
it's amazing movie.
Yeah.
It's everything in one movie. You've got nice cars, you've got good laughters,
Yep.
you've got somebody who's was super wealthy and fortunately very bored because of his his health.
Yep.
And in the end he has so much fun without even thinking of the money, because just somebody super poor is giving that person so much good time.
Yep. No, I
So
thought it was a brilliant movie. Yeah, it came up
it's an
with high rating
amazing
too.
amazing
So
movie.
you'd play Driss.
Omar Sy. Yeah, exactly.
Yeah, Omar Sy, right? Yeah, he
Yeah.
had a good character. He fantastic actor too. I really like that.
Yeah, he's a very good guy.
Well, that's brilliant. All right. Well, so Kevin, I want to thank you very much for your time today. As I always do, I took lots of notes. Big fan. So thank you very much for that. We're going to see you at Skip the Line on December 1st at 2 p.m. Eastern.
That's
so
right.
We're excited to have you join us there.
Yeah,
and,
your team booked me up.
And what I like to leave the end of the show with is I like to leave you the last word. So anything you want to share to entrepreneurs or to investors, the floor is yours. Feel free to share away.
Yeah, thanks. Yeah, I guess the last words, 2 words is have fun. Just have fun. This is so hard to make it more complex than what it is. You are dealing with human. It's completely irrational. So make sure that you have fun all the time.
Find somewhere to have fun in this process, right?
This is what matters in the end. And do work only with people that you have fun with. If you don't feel comfortable with the people in the room, you should not take their money. And yeah, that's the most important bit here.
I love it. Well, great last words, Kevin. Thank you very much again. Fantastic. Lots there to learn, lots to regurgitate and take in. But I love the idea about microfinancing, man. It's a different way of looking at things, and it can allow companies to move and pivot quicker and get into the right space. So I appreciate your time again. Thank you.
Thanks, Jeff. It's been fun.
Well, that was awesome. Big fan of Kevin and what those guys are doing. I love their platform. I love the idea of restructuring the finance, doing it in micros. I talked about the onion, peeling back the layers. There's lots of different layers where people are going to get involved, fail fast, and win. I think that's a great way of looking at things.